What else do people trade? Well, futures are very common. And you might say, if you're trading equity futures, are you trading equities? Well, kind of. So the equity futures are in the United States are called E-minis. And the E-minis are a future that you can, this is not the right one, S&P E-mini, here we go, ESA. And these are futures contracts that expire every month or so. And you can see the volume and the interest. I don't know if this is the September E-mini or what, but these are futures contracts that you trade, and they're actually more liquid, believe it or not, than equities and E-minis are different. E-minis are futures; they're futures contracts. You can see here that they're actual contracts that you have to deliver $110,000, and you can see the conversion ratios and things like that. Margin requirements are very low for E-minis. Contract price is $50 per point in the index. So this is something that a macro fund would trade, whereas an equities fund might trade the S&P ETF, which is the SPY. You need a special license to trade futures. And this is exactly right. I don't do macroeconomics. I don't even trade. I invest in private equity. I build companies. I'm an entrepreneur, but I do know a little bit about this field, and I'm happy to explain it to you. So futures are one trade that you could put on, for instance, is you can trade the Japanese futures, the Nikkei futures. And here's a Nikkei futures. And what you might want to do is you go long the future and you can short the currency. And this could be a hedge, or this could be a so-called Texas hedge, where you expect to make money on both. And so you can do all kinds of exotic relationships based on your economic ideas. For instance, you might say, well, what will happen is the Japanese government will ease. Let me draw some of this out. And this is the example of a macro trade. You would say, short JPY and go long Nikkei. And why would you do this? Well, you might say, I think the government, the Japanese government, will ease more than expected, which will hurt the Japanese yen because of obvious, carry trade type implications. So I want to short the yen over, say, the euro or the US dollar. I'm going to go long the Nikkei because I think this will stimulate Japanese economic activity. Companies that form the Nikkei index, like Toyota or Sony, etc., will benefit from that easing of monetary policy. So this is a trade where you're hoping to make money on both. Currencies and their stock prices are not necessary, and sovereign indices are not necessarily correlated, but this sort of hypothesis that you do based on economic research. Say you think that economic activity is bad and therefore the government wants to ease instead of tighten. This is the only way to manifest this kind of trade. You can't do it in stocks. You can buy individual stocks, I suppose, but what are you going to do with respect to this trade? And these get even more complicated, and we'll see how and why. But that's sort of an example of some currency trades and some futures trades. Now, there are more than just equity futures. There are things like commodity futures. Commodities, things like oil and gold. And you might say, well, here's an example of a pair trade, and let me make it a little bit more hedged. So let's say I would want to have more of a hedged pair trade. I want to go long commodities, and I want to be especially in commodities that have gotten beaten up, like crude. I don't know about gold, but maybe I want to be long crude, and maybe some other ones, small basket of, say, gold and silver and some ag commodities. And I want to also be long equities. And this is interesting. This is sort of a hedged trade, and we can get even more complicated in saying what kind of equities and why, and term structure and derivatives and all this stuff. But in general, why is this a hedged trade? Well, in general, these two are going to go in opposites. Things like gold and oil appreciate when equities go down. So this is a hedge that could make sense. You could make money on both sides, but in general, you're probably expecting to lose money. If equities keep going up, commodities will probably go down and continue to go down. But you might think that oil's had enough, and you think that you could do well on both sides of that trade. There's all kinds of other futures. Could anyone name some more futures? Some more types of futures that we haven't talked about? There's commodity. What else is there? While you guys try to figure that out, we're going to talk about some other markets. Like one we totally haven't talked about is fixed income or credit markets. Well, orange juice is a commodity. Sports betting are not futures. Wheat, metals, those are all commodities. Precious metals are commodities. Yep, there's $0 futures. Glad you mentioned that. I put them up here. Interest rate futures, yeah. There's other kinds of futures. And futures just literally, energy is commodity. But there's non-commodity energy futures, believe it or not. Tobaccos are commodity futures. Gold isn't a currency, it's a commodity. Yeah, debt futures and things like that. So I don't want to get too into commodities. There's all kinds of commodities, but this is a little bit beyond the scope of one, my expertise, and two, my interest. But let's keep going with the rest of macro. Suffice it to say, you can speculate on commodities and how and why you do that. I mean, sometimes they're alternatives to fiat, like gold is an alternative to fiat. And you can see, I don't know, I guess we can probably do some correlation coefficient with, let's say, gold. I don't know, let's go back to 1950 if we can. I don't know, try that. And we'll put gold in here, and we'll put SPY, or SPS index, and let's see if they're correlated and how. All right, so we can see that they're slightly negatively correlated, which makes sense. Gold drops when things are good, and gold rises when things are not so good. If we can edit this matrix and put bonds and all kinds of things in here, but in general, that's sort of the way some of those commodities work when they're alternative to fiat currency. Gold, people rush to gold for safety, but then there's actual utilities like crude oil is something that sort of is more, actually the opposite. It's more correlated with economic activity. This is this crude? This isn't crude, I don't think. Let's see, crude. Here we go. We picked the wrong one. So it's $45 a barrel, and there's some, it's not just about economic activity, but it is specific to the currency, like production levels and things like that. Right now we've been a big crude bear market, but countries like China are going to be consuming even more crude, or will they? We don't know. China could be in a recession. They're not very transparent about where exactly they're at. And things like wheat and corn are a lot less liquid markets that are really complex. And you can see the huge drops in commodity prices for agricultural commodities, like wheat and coffee and corn, and you can sort of think those through if you like, but they're sort of, there's weather futures, there we go. Thanks for adding that one. There's weather futures and catastrophic bonds, all kinds of interesting